originally you are a Brit, but you've been brought up in Hong Kong, lived in the United States, a true cosmopolitan, it would seem.
I was born in London, but I was in Hong Kong by the time I was 2 months old and spent 20 years there as a child. Wonderful. Educated here, but I've been in New York for the majority of my life, so yes.
And so has now held the position of chief executive for almost 2 years, joining AIG in 2010 to oversee the insurer's risk exposure, but has been clearly very well trained, having served 2 decades, I think it was about, at JP Morgan, at one point chief risk officer, always necessary when in the business of insurance, but also chief financial officer, and then dabbled in entrepreneurship as well for a lengthy amount of time, in fintech no less, the new phrase that we love to coin and use. And now, of course, took the reins from Bob Benmosche after he really stabilized the insurer and paid back what was a pretty controversial $180 billion government bailout in 2008, of course, from the insurers, AIG's near collapse from the financial crisis. But these were important lessons that were learned. That's the past, the ghost of AIG past, and we want to learn about the AIG present, the AIG future, the challenges, the risks, the opportunities, and what makes you so buoyantly optimistic from the moment, the time that I have spent with you already. This is a time of fear, Peter. This is a time where everyone is worried about Brexit, about concerns about the Middle East, about political instability. Why and what is AIG seeing its role at the moment in terms of fear? Because you have your own methodology. I think your mission statement is reduce our fear of the future. How do you do that?
Well, thank you very much for that kind introduction, and I'm really disappointed to be here because I've never been here before, and yet so many times we've invoked the Chatham House rules. So I thought I'd come here to learn them, only to find they've been waived for tonight. So I was really hoping to learn about them.
And on that note, I should just point out, can everyone make sure their phones are on silent? But tweet away. We want you to be incredibly sociable today, and we want you to tweet us, #CHEvents. But we will, of course, be having an on-the-record conversation.
Correct, that's the point. And I am extremely excited about the future of this industry, and it's been around for a long time. And as I thought about what I could do in my first year as CEO, I thought it was very important to go back to first principles as to what it is that's made insurance endure for centuries. And as a company, we insure a very broad range of risks, everything from cows in India in our microinsurance to satellite launches and almost everything in between. And so finding the common thread of this very broad range and looking at why it has persisted, it's the fundamental human condition of fear that we address. And I don't think fear is going to go away, so I'm very optimistic about the future. But I do think that we play an important role of reducing fear of the future and empowering our 90 million clients so that they can face the future with greater optimism. And I think it's the sort of the opposite side of the Keynesian animal spirits that we're dealing with. It's what holds economies back. If a grandmother is afraid of outliving her savings, she's not going to fund the education of her grandchildren. And we can solve that with an annuity that deals with longevity risk. And there's some unique ways in which insurance can deal with individuals' fear of the future, as well as companies that are afraid of cyber attack if they're embracing the promise of big data. So it's, to me, very exciting that we have an industry that remains relevant centuries after we were worried about fear of pirates, which we, by the way, still insure. We've had a number of claims around Somalia, and yet are dealing with a new form of piracy in terms of cyber attacks and ransomware and so on. So it really is a very exciting field because it touches so many parts of the world and the economy.
Do you feel that giving optimism of taking fear away is working at the moment?
Yes, and I think that we wouldn't have our customers come back again and again if it wasn't to some degree. Now, you can never eliminate fear, but you can put it in proportion. Misplaced fear, I think, has enormously damaging effects. A case in point was the response to the 9/11 attacks. There was a tremendous decline in air travel because of fear of flying after that, and a switch to additional driving. As any actuary knows, driving is a lot more dangerous than flying, and the incremental deaths from road accidents exceeded the number of deaths in the Twin Towers. And that's an example of misplaced fear. And so I see one of our core functions is to help look across the broad range of things that can go wrong and help people take appropriate mitigating action where it matters, and to divert resources from areas where it matters less. And we pay 1 million claims a month, including one of the most obscure claims we had, which is from a meteorite shower in Siberia, which damaged a bunch of warehouses that we were insuring. So we have data that comes from every one of those claims, sometimes thousands of data items, and how we synthesize information from that and share it with our clients and help them mitigate risk, avoid risk if possible, is one of the exciting things about what we do. And I do think that reduces fear, keeps fear in proportion, and I think that it's greatly satisfying when you get our clients say that we're a partner with them. We're not transferring risk 100%, well, very seldom. It's really sharing the risk with them. So we have a win-win proposition of just reducing the frequency and severity of bad things happening.
But of course, within business, reducing fear is to incentivize investment, to help spur growth. 2008, it's been 8 long, painful years, and yet we come back to another situation where businesses aren't willing to invest in the United Kingdom at the moment. We had just today Barclay Group concerning about the amount of 20% fall in demand that they're seeing at the moment in terms of wanting to invest in the housing. How are you helping mitigate the challenges and the risks we confront at this very moment in time?
Well, I think that the response to the financial crisis by policymakers around the world, in my view, has been remarkable. You can certainly question certain specific actions, but the potential for much worse outcomes, I think, was avoided. And I think that the recovery that we've witnessed, and I was at one of the tallest buildings today counting cranes, and I saw more cranes across London than I counted nuns in Rome last week, where I was at another conference. And the economy is certainly, I think, benefiting from the monetary stimulus, but there's clearly a lot of challenges. And I think that one of the responses to the financial crisis that worries me most is creeping protectionism. And I do think that integrated global economies are good for growth, good for society, albeit with externalities that we have to deal with. And I do see a bit of a retreat since '08, which I think is holding back growth.
The EU potentially losing the UK being one of those examples?
Well, certainly we as a company, and personally I think remaining would be a better outcome. I think that greater integration opens up opportunities for people as well as companies to exchange ideas, exchange goods and services in ways that raises outcomes for everybody. So yes, I do. But as a company, we obviously have to hope for the best and prepare for the worst, so we do a lot of scenario planning for that.
Are you scenario planning around Donald Trump potentially building walls and becoming far more protectionist?
We have to look at all outcomes.
Are you seeing appetite from other companies for that sort of protection?
Well, we can't, at least so far, we haven't designed a insurance policy against unwelcome election outcomes, but I do believe in the United Kingdom there's a vibrant betting market for that. But I'm not sure that the size of the stakes are big enough to make a difference to the people who care.
But you were just saying some of the fascinating cover that people do want to come and get, meteorite showers, for example. Give us a sense of what really makes AIG different. What's your USP? What I think it was a few days ago you told me that you fell in love with the company. Why did you fall in love with the company?
Well, this is a company obviously that had a very visible crisis. But it also had a remarkable history. We go back about 95 years to its foundation in China. And this is a company that expanded all over the world over the subsequent 95 years. And to give you an example, 75 years in Venezuela, more than 50 years in South Africa, and with a truly global workforce, which I think is a tremendous source of strength, the diversity of its a very experienced workforce. And then a diversity of business. And I think that that diversity of businesses stand us in good stead because you have cyclical ebbs and flows in pricing and demand, but they tend to iron out given that diversity. And the crisis was a good lesson to us to not allow the company to diversify too much away from insurance. So one of the important things we've done over the last 6 or 7 years is to focus the company on our core competence of insurance. So we've sold our aircraft leasing business, we've sold our consumer finance business, and a number of other activities which were really a distraction from our core business. However, the remaining insurance business does touch on almost every aspect of the economy and all over the world, and that gives us, I think, insights which we can then share with our clients. And the way we share that is to analyze these claims, things that go wrong where we have to pay out, and say what could we learn from each of those events that would help reduce the chance of them happening again. And that sort of feedback loop has become dramatically more powerful with the advent of big data, with the Internet of Things, sensors everywhere. And by harnessing that and sharing that in a usable way with our clients, we can become a partner with them based on our risk expertise as much as our financial strength. We have almost $100 billion of book equity so that we can make large promises to our clients, which are important. But that's not enough in a world awash with capital. That has to be coupled with risk expertise and advice. We've hired, for instance, about 500 property engineers over the last 4 years, whose job it is to understand vulnerability to earthquakes, floods, wind, and so on, and help our clients construct things in a more resilient way, whether it's against climate change or whatever. And so that expertise becomes critical if you want to differentiate yourself from just simply a provider of capacity. And I think that as we shift to a company that's more reliant on expertise, less reliant on investment income, we become more resilient if, for instance, quantitative easing lasts for a whole lot longer, because that is something which worries investors in insurance companies, for instance, that if they have become too dependent on investment income, where will this business model evolve? And in our view, we've got to have a much greater content based on the trust that we build with our clients and the expertise that we build, both with our experience of individuals, but also data analytics and the use of the rich data sources that we have.
So before I dig into your entrepreneurial background to be able to help maneuver yourselves through this disruption and opportunity, talk to me a little bit about the investors in insurance companies and some of your own investors, because you talk about selling off certain assets. There are two notable investors who would rather you had perhaps sold off a few more at certain points. Of course, we're talking about the role of investor activism and a so-called John Paulson and Carl Icahn spring to mind. Give us a sense how you navigate those waters as a leader of a business. Are they a force for bad, an activist investor?
Well, I think that I view activist investors as a natural part of the investor ecosystem. In fact, a natural complement to the indexing and passive investors that have grown dramatically. And you mentioned briefly the rehabilitation of the company back in 2011 and 12. To give you a sense of the scale and scope of that, in January of 2011, the US Treasury owned 92% of the equity of AIG. And starting in the spring of that year, in 5 equity offerings, was able to sell that equity to investors sufficient to repay the full government assistance plus a profit of $23 billion. That was done partly by selling it to hedge funds, many of whom were activists. So by the end of 2012, 35% of the company's ownership was in the hands of hedge funds. Today, that's only 12%. So I viewed them as a critical bridging function in terms of being willing to roll up their sleeves and analyze a company that had sold 90 non-core assets in the space of a few years, reconfigured its balance sheet in a much more robust way by eliminating over $2.5 trillion of derivatives and just simplified its balance sheet. And they were willing to put money into the company. So today, I view the attention from our two new board members, the Paulson and Icahn organizations, as part of that process. And they have 2 out of 16 board seats. They have slightly less than 5% ownership of the company. They did call for a strategy of splitting the company, which we resisted very publicly and announced in a strategy update in January why that did not make sense. And I'm happy to say that since they've been inside the firm with access to the rich information that you get as an insider, I think they've recognized the complexity of how best to simplify the company and focus it, to reduce our costs, improve our underwriting results, return excess capital to shareholders in a way that's sustainable. And I think that more than many other companies and other industries, our most important currency is trust. Our clients must trust us to be there for them when things go wrong. And so a real stakeholder perspective, viewing customers, employees, regulators, and shareholders as critical to the sustainable success of the company is something that I think have persuaded all our shareholders, all 100%, not just the 5%, is part of the ingredients for success here. And so having a balanced pace of reshaping, nothing too abrupt that keeps everybody on board is absolutely critical.
And so the strategy as of January still stands in your mind's eye?
It stands, and we're very much on track. And I think that the one thing that the inclusion of the activists is forced us to be a little bit more transparent. And I think that's not such a bad thing. We have clarified through a more modular disclosure of the company's activities, where we're making money, where we're not, how we can change the performance of the parts we can affect, and how we can shrink our exposure in the areas which are more passive, legacy activities. And so it has brought greater transparency and accountability, and so I do think that's a force for good.
Bring transparency to us now, if you will, of how, in an era of negative rates across most of Japanese debt, quantitative easing, bringing record low after record low. I mean, UK hit another one today in terms of borrowing costs. The money you're getting in terms of investment is not what you want to focus on anymore. It's new parts of the business. Talk to us about where you're looking to monetize your data at the moment and how you see this digital revolution really working at a base level for AIG.
Well, from a commercial point of view, the commercial clients are facing tremendous opportunities in their own business, but also risks. And one of the risks that data and the Internet of Things exposes companies to is cyber risk. We've been doing cyber insurance for about a dozen years, a bit more than that, 15 years. And with that, we've learned a fair amount of how to do it. We insure about 22,000 businesses and about 20 million individuals against identity theft. And every week we get claims, and each of those claims teaches us more. And while we provide a growing amount of insurance against those kinds of risks, probably more important than the insurance is the consulting, the provision of hardware and software that identifies threats real time, shares them among our clients. These are areas of growth. Certain other areas are going to be less attractive in terms of savings products because of the low interest rate environment. And I think the ability to do micro-segmentation, and this is where the richness of the data allows you to take an area that in general is scary and find the less scary parts of it. And I think this ability to move away from the average to the specific is a very exciting and powerful part of the data revolution. And then artificial intelligence is both a threat and an opportunity, and knowing what is the right boundary between the human and the machine as the power of artificial intelligence improves. So we've introduced a lot of robotics, a lot of machine learning for video images, which is quite exciting and is helping us and our clients better understand risk. And I'll give you just one example of that, which is quite interesting. Because we created a science group. I have a chief science officer who has hired about 150 scientists from diverse backgrounds. And we have academic collaborations with various research departments of universities. And one that I quite like is in New York with NYU, where we analyze video images of road junctions. And as you can imagine, you have a lot of accidents at road junctions, but you've got to have enough accidents, fatal accidents, before it's worth spending the millions of dollars to reconfigure a junction. But by analyzing continuous video of a junction, you can count the number of very near misses and make a case for a multi-million-dollar reconfiguration in 8 months rather than 8 years. And so for us, a collaboration like that is a way to test the power of machine learning, because you can't literally have an army of people staring at a TV screen. It's got to be the computer. And we ensure major construction projects where the same sort of video surveillance can identify emerging risks before they happen, and using machine learning techniques. So these are some of the rather interesting ways in which the growth in data analytics, I think, is transforming the world of insurance.
I think it's fascinating that you've come with your entrepreneurial background to a company that at the moment is good. I mean, we in London get so excited about showing off our fintech capabilities, and insurance tech really is a very growing, burgeoning area of that. Is an area that you're looking outside for some of this new technology? Is it an area you're just trying to grow from within? What are your competitors up to?
Well, we are very fortunate as a company that we have an opportunity-rich environment in terms of problems to solve. And we have limited resources, so we can't do it all ourselves. So we definitely partner with others. It's a very open source mindset. So whether it's the academic partnerships which we've developed through the science team, or whether it's more commercial partnerships, and we just announced a joint venture with a company called 2 Sigma and Hamilton Re to look at the small and medium enterprise market in the United States. And 2 Sigma is a very interesting company with about 500 engineers that have been applying their engineering and big data and internet commerce skills. It's co-founded by one of the founders of Amazon, to do investment management. And we're applying those same techniques to understand the risks of small businesses so that we can underwrite their insurance with as little intrusion in them as possible, because they leave such a large digital footprint before we even contact them. So it's a way to make it a more efficient way to underwrite. So yes, we don't think we have those skills to the same degree that they do, and we would find other partners in other areas. Another good example would be in the area of cyber, where one of the consulting firms we work for, we have an investment in, is K2, which is staffed with people from the intelligence services from various companies, for various countries, that would help our clients understand some of the vulnerabilities that employees and human behavior creates in cyber defense.
You, of course, been in the role for almost 2 years. You've just been to Italy to see some of your businesses. You've been to France. What do you feel you need as a chief executive right now to be saying to people, to be going out there? What are you finding you're putting from within yourself perhaps you hadn't expected?
Well, I feel one of the most important functions I have in this role is to listen. And so I have the great good fortune to have access to an enormously diverse set of clients and other stakeholders who are not afraid to share their views with me, and often their views of how to do my job better than me. But I like to listen and synthesize, and I'm blessed with a phenomenal board of directors who also give me very diverse perspectives. And then as a chief executive, I have to synthesize that, but also follow my own true north, and then provide leadership that hopefully is compelling to all concerned. And I think that it's a very different concept than perhaps the imperial CEO of old. The world's too complicated for any one person to have the answers. And so tapping into diverse perspectives and synthesizing them is what I see as a critical function. Sharing ideas, almost like a bee going from flower to flower, cross-pollinating ideas, I see as a very important function of a CEO.
Before we put it to the audience, I want you to get ready to throw up your hands with some questions. Picture for us 2 years' time. You've been in the job for 4 years. What more do you want to have achieved for your stakeholders? Where do you want to see AIG? Because there are still some concerns. You're not valued perhaps in certain measurements as much as some of your competitors in terms of price to book, for example. How do you want to convince people that the love you have for your company?
Well, our vision is to be our client's most valued insurer. So it's value rather than volume. So I'm not looking to be the biggest, but I want to be valued by the clients we've chosen to serve. And I think that comes from first empathizing with a client, saying, what do you actually expect from a company like us? And then reshaping and refocusing the company on the things that provide most value to the clients that we're trying to serve. And so if the company is better at that 2 years from now than it is today, I will feel very good. Like any large company that operates around the world, there's a lot of factors that are outside of our control, and our ability to adapt to those, whether it's Brexit or something else, is something I will be watching very carefully to make sure the company is resilient and adaptable